What a week we've had in the stock market last week, with major indices all being down. As an example, S&P 500 index was down close to 2.4%. Looking at the performance of Dow Jones Industrial Average, it was also down by just over 2%. NASDAQ Composite was down massive by almost 3% last week. Russell 2000 Index was down by just shy of 2%. And of course, S&P Toronto Stock Exchange here in Canada was down by close to 2.6%. Definitely not the greatest week from a stock performance in the market. And that definitely translated in terms of our own portfolio performance. Last week, we were just showing some positive returns. And now this week, look at that. We are at the unrealized loss of close to $7,400. Hello, everyone. My name is Mo, and here on Momentum Finance, I'll share with you various videos related to investing in the stock market through investing in dividend stocks, growth stocks, passive investing, real estate, and crypto, as well as discussing ways to reach financial freedom. In this video, we're going to be talking about our own stock investment portfolio that we have. It's mainly a passive investment portfolio, investing in exchange traded funds, low cost exchange traded funds that gives us exposure to both dividend and growth investing. Now, our portfolio consists mainly of 6 different exchange traded funds. The largest position that we have is VDY, or Vanguard FTSE Canadian High Dividend Yield Index ETF. It's a relatively low cost index ETF with a management expense ratio of 0.22%. It gives us exposure to about 60 high quality dividend paying Canadian stocks. We currently have a total of 3,951 shares with a market value of $162,149. It currently stands for about 43% of our portfolio. VDY in our overall portfolio between my wife and I is currently down by about 1.5%. What's very noticeable about VDY is the fact that it's the only position here on our portfolio that pays its dividend distributions on a monthly basis. Our second large holding here is V-Equity, or Vanguard All Equity ETF portfolio. It has the highest fee among our 6 picks, tying closely with that of the V, with a management expense ratio of 0.24, but it's still considered relatively low fee compared to many mutual funds out there that charge you anywhere between 1 to sometimes even 3% in fee. V-Equity actually accounts for about 23% of our portfolio at this time. It is the one holding that we have in our Smith Maneuver portfolio. We currently have 2,583 shares of V-Equity with a market value of $85,394. It is showing to be down by close to 8% at this time. V-Equity only pays its dividend distributions once a year in the month of January. Our third large holding is VFV, or Vanguard S&P 500 Index ETF. It actually has one of the lowest fees that we see among our positions, with a fee of only 0.09%. Through VFV, we are getting exposure to the 500 largest US companies, but it's available for us in Canadian dollars. So we can actually trade it at no charge to Wealthsimple Trade. We currently have 896 shares of VFV, and it accounts for 22% of our portfolio. Our shares of VFE are overall showing a positive return of 2.1%. VFE does pay its dividend distributions quarterly in the months of January, April, July, and October. Our fourth large holding is XEF. It's a BlackRock Holdings iShares Core MSCI East and Far East Index ETF, with the total number of shares of 621, or a market value of $19,586. It accounts for 5% of our portfolio at this time, and it does pay its dividend on a biannual basis in the months of January and June. It has a management expense ratio of 0.22%. Next, our fifth large holding is V, or Vanguard FTSE Emerging Markets All Cap Index ETF. It gives us exposure to international markets. With a breakdown exposure of 5%, we have 585 shares of V. It does show to be up by 2.3% at this time. V pays its dividend on a quarterly basis, and it's paid in the months of January, March, June, and September. V also has the relatively higher management expense ratio among our positions with a fee of 0.24%. And lastly, 𝐻𝐈𝐖 is our other index ETF. It's another BlackRock iShares Core S&P 500 Toronto Stock Exchange Caps Composite Index ETF with the lowest fee that we have. It's only at 0.06% fee. It gives us exposure to virtually all of the stocks in Canadian Toronto Stock Exchange. We have a total of 176 shares of it. It is down by 4.2%. We currently have about 1% exposure to 𝐻𝐈𝐖. 𝐻𝐈𝐖 does pay the dividends also on a quarterly basis, and it's paid in the months of January, March, June, and September. We do still have our 15 shares of Bank of Nova Scotia, ticker symbol BNS. Bank of Nova Scotia is traded both in Canadian dollars and US dollars. We have currently the Canadian dollar shares of it. We plan to sell our shares of Bank of Nova Scotia as soon as it hits kind of a break-even point. Currently, it's down by 11.7%. We're waiting for it to hit that purchase price that we had, and after that, we were going to sell it because we get exposure to Bank of Nova Scotia through both of our holdings in VDY as well as 𝐻𝐈𝐖. Bank of Nova Scotia does pay their dividends on quarterly basis in the months of January, April, July, and October. As you notice, we definitely are going to be expecting one of our higher amounts of monthly dividends in the months of January as it's coming forward, and we're looking forward to it. We definitely will provide an update at the time. Given the price changes for our portfolio, we are currently seeing a yield on cost of 2.81% and a portfolio yield of 2.86%. That's the percentage of approximate percentage of dividends that dividend yield that we have in this portfolio. From a geographical exposure breakdown, about 52% of our investments in this portfolio is in Canadian stocks, 32% in US stocks, and 16% in international stocks, with us having the goal of bringing the international exposure to higher to about 30%, maintaining the US exposure at 30%, and lowering our Canadian exposure to about 40%. Our portfolio currently has an average dividend amount of $10,784 to be gained annually. If we divide it equally between the 12 months in a year, that leaves us with $899 in dividend income per month, which averages about $30 per day. Not too bad at all. Although dividend income is one ways that we are excited about as we see this dividend amount is growing, that's not the only way that we will look forward to, gaining value from this investment stock and ETF portfolio. We are also actually passionate about the appreciation and the growth in the value. Currently, of course, we are at the negative territory, but again, this is something to be expected. As at the onset of the video, we talked about the market has been down past week, and we are actually seeing some tough year for the market. The year 2022 has definitely been a year that the markets have not done well at all. The S&P 500 has been down close to almost 20%, with other major indices as well being down double digits. So we are not that surprised as a result with our overall performance, given that currently with our total portfolio having a market value of $376,768, it's only down from its book value by 1.92%, or just about 2%. In grand scheme of things, knowing how poorly the stock market has done this year, it's not the worst performance, and something that we are definitely very positive around how it's going to turn around and become a much better story with patience and financial discipline. Now, I'm curious, what is your sentiment about the market at this time? As you may know, CNN, through CNN Business, has an index called Fear and Greed Index that shows how bullish or how bearish investors are at any point in time with regards to stock market. Currently, we are showing at the score of 55, which is hovering within that range of the neutral. A few days ago and a few weeks ago, in fact, as you noticed, we were at that greed territory. But it seems that we are kind of hovering around that fear territory close gradually. We are leaning towards that. So we'll see how these numbers change over time. But I would love to know about your sentiment of the market. Where do you see the market in the next several weeks? Are you bullish about the market at this time, or are you more bearish and perhaps a little bit more fearful? Just saying that reminds me, of course, of the sentiment and the saying of some of the legendary investor. I believe it's been Warren Buffett that refers to the fact that he's very bullish when others are fearful, and that's one of the best times that actually he tries to go after the high quality value stocks or investment options, and vice versa. When everybody is greedy, that's the time that he tries to be more fearful and watch out and be more careful around diving into the stock market. Share your sentiment as well with us in the comment section and leave us what you think of that. I hope you found this video beneficial. Hopefully through this video we shared with you how easily you can actually go about investing in the stock market. You don't have to necessarily do a ton of research of having to really go and pick stocks. Through investing in passive exchange traded funds, you can really get the guess game out of it. You don't have to really try to beat the market and be that genius that we sometimes think we are, and in reality stock market is a beast, and it's not something that easily anybody can repeatedly outperform the market. In many cases it's probably okay, and perhaps the better approach and strategy to be comfortable with the average returns through investing in index funds. Most of these index funds that you saw in this portfolio that we had, they're also low cost, making it very affordable and easy for investors such as myself to really get exposure to the stock market without having to do a lot of research and legwork. I hope as a result this video was beneficial to you and you gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we try to post every week videos about investing in the stock market, including dividend stocks, growth stock, and penny stocks. We also talk about ways to reach financial independence and financial freedom. Thank you, and I hope to see you all next time.